Hello, happy Monday to you. How you doing out there? Welcome to The Closing Beat, a show that we do every day here, financial advisors at Jazz Wealth. One of the only advisors on YouTube that can actually talk about the markets, right? You ever notice that? Advisors want to talk about the plan and like what you're going to do and all this stuff. And then you go, well, tell me about the investments, and they can't talk it. So we do this every day here to build a little credibility with you guys so you know we are more than just these really cool shirts that we wear with our new little logo on there. We are also ranked again 2 years in a row. USA Today, America's best financial advisory firm. I believe the thing comes out at the end of the month, they say. So it'll be on their website and everything. I don't know. Seems pretty cool there. Last week, our Wine and Wealth class, which is a class we do every Thursday for clients and clients only, Eric actually took over there and talked about how taxes work in retirement. We have a lot of people. This is how this goes. As the economy gets stronger and the stock market is stronger, more and more people go, close enough. I want to retire. So we're going through a lot of that, and we're getting a lot of tax questions. So we're going through that little by little. Feel free to check out that class for your client. It's in the portal and available for you to watch. All right. I leave you last week. And on Friday, we get jobs numbers. 303,000 jobs created in just March. Now, it's not really necessarily new jobs, it's new payroll. So it could be transitions inside of a company or whatever. Keep in mind that the best guess by the smartest people out there that watch this stuff like a hawk was 250,000. So we just blew that number away. And what happens there is this number is really inefficient. You want to look at like the private payrolls if you want to get a better understanding of this. What's going to happen with that 303,000 jobs created, they're going to revise it down. They do this all the time. So we'll get down the road somewhere and they'll just quietly go, we were a little off. It wasn't 303,000, it was 260,000 or something. So be on the lookout for that. Those revisions are big. Anyways, what I wanted to point out about that is, if there's that many jobs, which is impressive, that's an incredible amount of jobs, blowout number, then doesn't that mean that the economy's strong? And doesn't it mean that inflation might have trouble going a little bit lower, which then doesn't it mean that the Fed doesn't need to cut rates? In fact, maybe they could raise rates? Well, we saw a little bit of that, little rumblings of that maybe the Fed should go one more higher. But the market doesn't care or didn't care, because for the moment, if everything is good, you're willing to continue to invest. So we go over to the S&P here. One thing that I do want to point out, we talked about this at length the other day. I put it in our notes from Jazz email over the weekend for anybody that missed it. This is the big move area we were talking about. If you want to learn more, we talked about it like every day last week and the week before and all that. We're pinching. This whole uptrend was getting quieter and quieter and quieter, which remember means that the buyers were getting less interested, but the sellers were not fearful. That's all that means. Like when people draw lines on there, they're just trying to determine what buyers and sellers are thinking. So we kept coming up to this point, and that's what I was trying to point out, like there's a big move coming. I don't know which direction it's going to be. I'm not going to guess and try to be that guy, but Look at that. Didn't we get it on Thursday? So the big move coming now with sellers saying, maybe enough's enough. Maybe I'll take some profits. Now, to be fair, Friday was fairly strong, right? We tried to recover almost all of it, but we're still stuck under that area. We still have sellers getting in control of the market. So when you look at the sort of price movement of the stock market, you got to be leaning sideways to down versus up. Now, today could have changed that real easily. If today the market were higher and held, then you would say, okay, that was a false alarm. Temporary selling, short-term people who bought here and want to sell here. It's small profits, the day traders, not the day traders, but like the swing traders and things like that. So nonetheless, the big move came there. Where do we go from here? Like what's next? Probably not a whole lot of nothing, actually. We've got earnings season starting next week. Yes, right? So the big banks will kick things off. We'll go over that in a minute. We got earnings season starting. We do have the inflation numbers coming out this week, so that could be a little bit of a mover there. I think it's coming out on Wednesday. But I think a lot of people are already saying, well, if it's that good, then that means inflation probably won't go down. But for the moment, we don't care. It just doesn't seem to matter. It's a really, really weird thing going on there. Now, I'm going to bounce around just a tiny little bit. When you look at rates moving higher, so prices moving lower. The lower we go, the higher interest rates go. This is the price of the long bond at this point anyways. And so the bond market believes it, but the stock market's like, yay, everything's great, right? The bond market's telling you what other people think. The bond market's telling you what the Fed is doing or likely to do. Rates are moving higher in anticipation of either A, rates as they stand, the Fed funds rate, staying either higher for longer, you've probably seen that term out there, or even a tick higher. We now have less than a coin flip chance that in June, the next rate decision, meeting that they have, that they will cut rates. It's not happening. There's just no way. If inflation came in like a point lower for some reason, all right, maybe, but it's just not going to happen. So for those of you looking for lower rates, you may want to look somewhere else, I guess. All right, anyways, for the S&P, we've got earnings season kicking off here. By the time we get to May, actually 1 month from today, 30 days from now, 85% of the S&P will have reported earnings, right? We're expecting, this is a really kind of a side topic, but we're expecting the S&P to show earnings growth as a whole of 3%. There is a huge problem, though, that is potentially a problem if it doesn't really pan out nicely. The problem is that in order to get that 3% growth, we need the top 10 names in the S&P to report as or better than expected. So I'm going to try to show you something. Hang with me for a second. Let's start at the bottom, right? We're going to start at the bottom. Bottom right-hand side. The top 10 companies, their year-over-year earnings growth should come in at 32%. That is the average estimate, right? So if we do a little bit better, it's good news, of course. A little bit worse, it's like, uh-oh, something's wrong. If you look at just the other 490 names, earnings growth is supposed to slow very, very slowly. And that's not a problem, but it's a better barometer of the entire stock market. But because of these 10 names and the size of their earnings growth, the net result to the S&P is expected to be a 3% earnings growth. So what does that tell you? It tells you that you really only have to look at these names during earnings season. If the other 490 come anywhere near that sub 4% growth rate there, negative 4%, well, then everything's going to be fine, right? The problem is if NVIDIA does not show 406% year-over-year growth, and to be honest, that's the kind of one that everybody's looking at, well, we've got a problem. All of a sudden, this number moves drastically lower, which means we have a bigger impact on the total S&P earnings. So NVIDIA expecting 406, Amazon 175% year-over-year growth. Is that likely? I mean, there's a lot of Amazon boxes at my house, but I don't know. Meta, 91%. Eli Lilly, here's the top 10. Just wanted to point that out to you so you can see they are going to control what happens. So you look at these, you put these names on a list and go, when are they reporting? I want to know when these guys report. Then I want to match it up with what everybody's expecting. And if that's the case, we're fine. We'll have that 3% earnings growth, which is essentially a revised lower number. We were expecting a little bit more, but that's okay. If that's where the bar has been set, we only have to achieve that. The problem is the top 10 have all control over the bar. They're going to get to move it. So yeah, the banks, JP Morgan will report next week. It's interesting. Berkshire Hathaway will report as well. But until we get to the tech names, then there's not really much that's going to happen. So we go back to the S&P here and we say, okay, day to day, we're looking for anything. No, the eclipse today did not move the market, right? It just not newsworthy. It's fun to see, and we tried to look too. I didn't really see anything, but nonetheless, we need day to day market moving news. The tariffs on China. Oh, wow, look at Janet Yellen going back to the Trump days there. Nope, didn't work. It doesn't do anything. We're looking for earnings. We're looking for a decision or a more comfortable direction with what the Fed is going to do. Right now, the Fed has no reason to lower rates. I'm going to keep saying that, and I'm very confident I'm not going to be wrong on that one. So just hang in there. All right, as far as the S&P goes, let's do something we haven't done in a while. We'll take a sector view of the S&P. And the way I like to do this is just a simple line chart. Yeah, I don't know why it's blurry. I'm sorry about that. So what I like to do is take the 11 sectors, put them on a screen so you can really quickly see where's all the action coming from. Communication services and information technology. That's who's been leading the way. But in tech, what's that? Rolling over there a little bit. All the action is here. The other sectors, real estate's the worst out of all of them so far this year. Utilities was trying to bounce a little bit. It was the only sector that wasn't overbought for at least a little bit there. Look at everybody else. Healthcare, well, we know what happened last week. Consumer staples, industrials, they're not moving the market. They can go up all they want. That's not going to have any impact. Consumer discretionary, where's the action? Fading away. There's nothing here, nothing here, nothing here, nothing here. Energy, we know about the run there. That's not moving the market. It's not big enough. It can't do it. I think it's the second smallest sector of all of them there. Financials, that'll change because of earnings, but is there anything going on here? Nope. Materials, that can go as high as it wants. It's not going to move the market. We need this sector up here and this one down here to giddy up, get going, right? And with earnings season, it'd be fun actually to take this picture, come back 30 days from now, take another picture and compare the two. You're going to see a bit of a wild mess there, but nonetheless, sector-wise, it's like puppies in a little room. They're all going wherever the heck they want. There's no rhyme or reason to direction that they're going. The two sectors we need, one of them is starting to get a little bit tired. All right, so you keep that in mind if you're thinking gung-ho stock market. Let's just do it. This is going to be great. I'm going to do it. Huh? The NASDAQ, of course, with the tech sector rolling over, you've got the NASDAQ, of course, rolling over as well. That's nothing new, nothing interesting to point out there. The Dow, with the biggest pullback out of all of the indices there, that's largely because of healthcare last week. Today, at least to start the week, not a whole lot that we can go on, so not much to stick there. Small caps, if you look at small caps here today, they were still, as a whole, the best performer. Under the surface, you're missing a lot of action. It's kind of like what I just shared with you. If you took the Russell 2000, you can't really break it down into the best sectors like the S&P, but if you were to try to do that, you would see puppies in a room again, spaghetti on a plate, whatever you want to call it, right? Just stuff going everywhere. Bringing back all my old sayings there. So that's what's going on there. Oil taking a bit of an off day. However, I would point out that that off day was immediately bought up. People believing that that is the reason to buy. And actually, I'm going to tease it a little bit. I'm going to tease it. Working on a great study. This is fun because we get data all that we want. What if, this will be in our notes from Jazz this weekend, what if, hypothetically, just for fun, when the market was down one day, you bought? That's it. And if the market was up, you bought. And then, so those are two separate portfolios. And then you tracked. What happens if I only bought on up days? By like say 3:30 in the afternoon. If it's up, we're going to say it's up and you just buy. And then I only bought on down days. What would the long-term performance look like there? And then even greater than that, what would happen if you only bought, this would be less times, but you only bought when the market had what it had on Thursday, a 1% down day or greater. Whether it's the first one, the 10th one, doesn't matter. You just bought. What would it look like? There is, I won't tease it. It's an astonishing difference. It's a really, really kind of a cool study towards like, hey, you want to buy, when things are falling. You don't want to chase. You want to buy down, especially if you're a long-term investor. All right. What else do I want to point out? Large cap growth, by the way, was the weakest factor of the market. Remember how we break it into the 9 factors? One day we'll have a visual for that or something. But I don't today. All right, so let's go to stocks in the news here. I don't want to sort of harp on the market and pretend like there's a lot to look forward to here. Individual news day to day until Wednesday. That's likely what the market's going to be just kind of doing. So individual news today. Tesla. I saw like a, what was it? A 12-month price target of like 220 something on that. And then they maybe want to start looking into it. You know that most people believe that Tesla is headed towards 220. I don't know. I just kind of got distracted there and was looking at it. Nonetheless, they're in the news. Well, they were in the news Friday, to be honest. So there's the news that, hey, we're not going to make the cheaper car, and Reuters or somebody. And then Elon Musk tweets out, they're lying again. That's not true. And after the market closed, he goes, hey, by the way, our robo-taxis, August 8th, right? 4 months from now. So in exactly 4 months, we're going to have robo-taxis, which means another source of income, which means this could be kind of interesting. If you look at Tesla's price today, it was an outlier of the big cap stocks, the large cap stocks, right? It kind of stood out. Almost a 5% gain there. It's not necessarily new news, but I wanted to follow up on the performance of that today. Taiwan Semiconductors. So Phoenix, Arizona. They're going to build a plant out there. They're going to get $6.6 billion in grants from the CHIPS Act. They're going to get a $5 billion loan guarantee. How much are these plants, by the way? These are really expensive. So nonetheless, that's $6.6 billion. It's not the most that's come out of the CHIPS Act, but if you look at the balance of the money that they were going to give out, there is currently $18.6 billion left to give out. So these sort of stock moving things around the news around the chips, remember, there's $18.6 billion of our money that we've decided to go, come over here, you know, build your incredibly expensive plants over here. It'll be a good time. So that's that. United Airlines, this is not necessarily new news. It did hit today. A lot of people predicted it. I did not. I didn't pay attention to that. They are going to postpone their investor day. They're basically saying, hey, we're going through some stuff here. You know, we've had some issues, tires falling off and engines, all kinds of crap and stuff. We think it's best that we focus on that for the moment and not talk about our financials. Although the CEO did give a little bit of a hint in there. He said we shouldn't be sitting around talking about our amazing, stellar, great financials when we should really be focused on safety. I think the FAA would agree. And so there's not going to be an investor day. We won't have anything to cover there. Spirit Airlines, you know, they're doing what they gotta do. They're doing their best, you know. Spirit Airlines largely discounting their flights by quite a bit, I might add. Was wherever I went last, between Southwest and Spirit, there was a 50% difference in price of tickets there. So flew on Spirit. Nonetheless, they're going to try to get their dough straight, right? So they're delaying some. They got an official agreement from Airbus to delay, I think it was like 45 of the planes that they were supposed to be taking over this year and next year. They're also getting rid of, they're furloughing a bunch of pilots. They're going through cost-cutting measures, right? I don't know if it's good, but the market seemed to respond positively to that today. They're going to be giving up routes. Those are not easy to get. They may not get them back. They're going to really try to pare back and save some money. I don't know how much other choice they have, really. All right, and if you're into this sort of thing, Pfizer in Barron's over the weekend there, it is popular to talk about drugs coming off patent. And the argument that they were making was Pfizer has a good chunk of really revenue right now that they'll be able to have, though other companies will have the generic version of them because they'll be off patent. They'll know the formula. They can just go ahead and make it and sell it for cheaper. So they were trying to break down the numbers there. Honestly, like that stuff just bores me to death. So I didn't really pay as much attention as I could there. And that's just, yeah, you can't be good at everything, right? I just find that stuff boring. Anyways, earnings-wise, there's not really anything, right? We'll pick that up the end of the week, beginning of the week, as we get into earnings season there. And that's really all. If you have any questions, I'm happy to answer your questions and see if I can. Of course, we'll pop this out here. And what happened to Harry Chu, man? Harry Chu gone? DLM says, yeah, there's just currently no reason for them to lower rates. Remember, they lower rates because they have to, not because we want them to. It never happens that way. Yeah. Andrew's adding to ENR this week. All right. You like that little discount there. So, man, bring back the bunny, right? Kirk is not happy with the BlackRock CEO. You are not the only ones. I know there's some frustration out there. So there you go. Hey, is this live right now? Yeah, man, this is live. Ask a question there. Happy to help with you. Shorter one today. There's not a whole lot, to cover. And you're working on a second job because you want to buy more Tesla stock. Hey, I don't blame you. I don't blame you. And I'm not saying it's a buy. I'm saying it is obviously discounted relative to where it's been, especially over the last like 8-9 months. So, you like discounts? If you like discounts, by the way, what was I just looking at? Remember Lamb Weston with their earnings? Look at this. I didn't follow. I wasn't here, so I didn't get a chance to talk to you guys about the earnings. But yeah, I mean, that's a discount. Makes you kind of want to use, if you go into our research site, you can actually see how often does Lamb Weston fall 30% and what happens afterwards. Uh-oh, something wrong there. Like that. Boop. All right. Anyways, I just thought that was cool. Something to look at there. A little bit something different for those of you that if you like a discount, right? I mean, that's a mover. Wouldn't think that of them, but that one is. How do you think earnings will affect the stock market this quarter? I'm not optimistic that we're going to hit the new lowered bar. And again, you just have to watch a handful of names to figure that out, and that will be decided really quickly. So I'm hoping that helps, kind of soften things up a little bit as we get into, think about what will happen 30 days from now. What will it be? Sell in May and go away. You're going to see it everywhere. Remember the drinking game we did last year where it's like every time you hear that, take a drink? I'm not doing it again this year, but you guys are on your own. You like the pullback in Starbucks? I like pullbacks on large names, period. Yes. Is buying earlier in the day usually better than the last hour of trading? Does depend if the market is up, if the market is opened higher or lower. We did this. God, we should probably come back to revisiting some of this. I did a wine and wealth class on that. When to buy. So what we did is we broke down the best day of the week to buy if you're a long-term investor. Then we said, of the best day of the week, is it better to buy like 11:30 or 2:30 market time, right? So we went through each one of those. There's a slight advantage to buying 2:30. I don't remember the exact number, but that was a fun class. We had to like repopulate that data and come back to it. I'm with you on that one. Guess the Dow. Cody is out today. He took a personal day to go to a concert. So I have to announce or do you know? You know the winner? Wow. Look at Kevin go. All right, let's see what we got. Hey, Bruce H., the winner at Guess the Dow. 38,903.89. We don't need Cody. He was off by $1. Oh, he was only off by 1 point? Oh, so it was 38,904. And Bruce H. got within 1 point. That's got to be a record. I would imagine that's a record there. Congratulations, Bruce H. What did he decide? He's taking a gift card. He is not a client. Bruce, what are you doing, man? jazzwealth.com. But congratulations on that, and that should be either out or on its way to you. Cool. 1 point. I wish we could give you more, but there is a rule. The SEC has a rule that you cannot give people or accept more than $100. That is why the amount is what it is. Yep. What do we got here? Powerball was one. Oh, I saw that. Yeah. Well, on the way home, I see the sign change, and it went down to, some insignificant amount, like 90 million or something. Yeah, Bruce nailed it, man. That was cool. I'd invest in a high yield REIT shares before real estate. Just putting that out there. Stocks greater than real estate. Well, okay. So think about the tax implications there, depending on the type of account you're doing it in. Remember, asset location is just, I would argue, even maybe more important than asset allocation, right? That's kind of been boiled down to a fancy little science these days, but asset location is where the little extra returns start to add up there. So think about that. And we've done, if you want to look, just probably search that on our channel if you want to see some free videos about that. If you can't find any, leave a comment and we'll come back to it. All right. I'm going to wrap it up there. Again, short one today because I don't want to sit around and pretend like something is happening. We don't know. A slow start to the week there. You guys enjoy the rest of your day or evening, and thanks for supporting us. We'll be back tomorrow. Adios. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.